S&P coming off its best week of the year, still on track, though, to snap a 5-month win streak as investors debate whether the pullback from the March highs has run its course. Joining us now, Jeff deGraaf. He's the chairman and head of technical research at Renaissance Macro. It's good to see you again. You look at this snapback, we'll call it the bounce. Do you believe in it? Should we, from a technical standpoint?
Well, I think so, Scott. I mean, it's not a lock. There's three things that we look for a good, what we call tactical lows in an uptrend, and no doubt we're still in an uptrend, so that's the good news. We look for an external oversold condition. We look for an internal oversold condition, which both of those we've had. And then we like to see a sentiment flush. We like to see a rise in put-call ratios and some of the other high-frequency data, which we haven't really seen. But we did get that external oversold condition. Our oscillator got down to an oversold level that usually provides some type of bounce. I think the risk is when you're in an uptrend, if you wait for all three conditions, it's great to have them. It obviously improves the probability that good things are going to happen. But if you wait for all three to happen, the risk is that you miss out. And so when we get 2 out of 3, as Meatloaf said, it ain't bad, and we stick with the trend.
I get you, that we were due for a bounce. I think everybody would suggest that we were. But that doesn't necessarily mean that the risk reward for stocks in the near term, at least, hasn't changed, even if it's just an incremental move. You start talking about words like stagflation, et cetera, maybe that's a difference maker.
Well, I mean, there's no doubt, and it's been the case for at least 6 months now that we think the biggest risk to equities is elevated 10-year yields. That translates specifically into elevated real yields. We're right at the cusp. We're right there. When we get to this 2.25% in real yields, that starts to push against equities. It's not dramatic, but it certainly gives us more of an elongated pause until you start to catch your breath there. So we'll see what happens. But I think absolutely, if you had to say what is the biggest risk to equities here from a valuation standpoint, all these things filter back to real yields. And that's one thing that I think that can keep a lid on things. But keep in mind, we are in an uptrend. And usually what that means is that you're going to go into a consolidation, you're going to pause, you're going to refresh, and then you're going to break out higher again. And I think that's what we're doing here.
Differences are obviously what helps make a market. I find it kind of interesting that whereas Adam Parker puts out a note suggesting he's less bullish, at least right now, because maybe China is not recovering like we expected it to, whereas you say you're becoming more strategically bullish on China. How so?
Yeah, that's interesting. I know Adam, but I don't read his research. But that said, we made a tactical call on China back in early February. Now, I will be the first to say that was luckier than it was good. I mean, there are obviously signposts that we used to buy, and it was really very timely. That was a tactical call. Now, sometimes, and this is one of those times, that tactical call will turn into a strategic call. That's because we start to see evidence that the trend's changing. We saw a breakout in Hong Kong. Obviously, that's the kissing cousin to China. We're now seeing a breakout, a 65-day breakout in the Shanghai 300. The 50-day is not yet through the 200-day, but the price is through the 200-day moving average. So incrementally, build by build, we're starting to see better things happen. And I think it's really reflected in some of the metals that we're seeing globally, right? I mean, copper is broken out. It acts well. Maybe what we're seeing is these interest rates here are going to end up putting a lid on the inflationary pressures, on the growth pressures here domestically, but at the same time, the baton gets passed to China, and they actually start to help elevate or at least buoy global growth. We'll see if that happens, but we think the equity markets in China have turned. They are turning, but we are actually making the case that they're turned.
All right. We'll see you soon. Jeff, thank you.
Thank you.